Today we're gonna learn about classic market structure, not advanced market structure that ICT teaches, because I don't think that it's really that required. It makes everything complicated. It still works, but I think that classic market structure is still more beneficial. So let's start. Market moves creating swing highs and swing lows. It moves up and down, so it moves up, retraces down, moves up, retraces down, moves up, maybe consolidates, moves down, takes out some lows, keeps moving up, again a retracement, then it breaks the low, and then it flips. This is very weird schematic, but this is just representation of price action. Obviously, it's always different, but to explain, we will use this, and then we will get to live examples. Classic market structure teaches that when we break a high with a closure, the low that's responsible for breaking that high becomes protected, so it should not be taken. So when we break another high, this low becomes protected. Then, when we break a protected low, we create a flip, and now we need to switch our bias to bearish or bullish. It depends if we broke a low or a high. So once this occurred, we wait for the low, for the weak low to get broken, and this high to become protected. This will help you to build a bias and narrative. What's the difference between bias and narrative? Bias is just a direction where you willing to see a market go, and narrative is how it will do it. So now, what is a weak high, weak low? What makes a high or a low weak? So the high becomes weak when the high doesn't manage to put in a new low with a closure. So when we see certain signature to enter that we will learn in the future, we can participate in a move up to take out a weak high. When we take out a weak high, it's really important that we do not create a flip. To create a flip, we need to take out a strong, protected high. And the second scenario, when we have a weak high, it's when we take out a low, but we do not close. So we create a sweep. This will be in the form of a wick, and we can expect a price to go out and take out a high. So now let's get into real examples and see how it works in real price action. So we're on a Bitcoin on daily time frame, and now I will give you a couple seconds to try and see it yourself. I know you're waiting for me to show it. Pause the video. I took this way of teaching from ICT, by the way. Here you can see a fail to close. We will call it later a FTC, like f.t.c. So since this low didn't put in a new high, this low became weak and it got broken. This high didn't put in a new low, so we created a failure swing, and then it got taken. Here you can see that we created a sweep and we didn't take this low. Why? Because we hit the terminus, so the level that was crucial in this current price action, after which retracement has to occur. So we created a failure swing here, and this high became weak and it easily got taken after consolidation. Here, this internal high. Here we have failure swing, so this high got taken. And then here, we created equal highs. Equal highs put in a new low, so we treat them the same as fail to closes. But you do not neglect them, because later they will always get taken. But on Bitcoin, price action is kind of weird, and they stay for much longer usually than on Nasdaq or Forex pairs. So we break down lower, 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 lower. And here you can see that we created a sweep. So this high has to become weak, but the current trend is still bearish. So I'm not trying to predict the market right now. So as you can see, here we started moving from consolidation. We can try to see a little bit more. There was a protected high. I think it stood out, this one. So when we broke it, and we created here also a sweep, we can anticipate a reversal in internal market direction, because this is 5-minute chart, so we do not expect Bitcoin to go to $1 billion after we see 5-minute flip. So now here we broke. Here we broke a high with a closure and also a very big displacement. So this low became protected. We retraced, didn't take the low. And then when we closed above this high or this one, I like both of them, this low became protected. So unless we hit a terminus, like a point where price is heading to, these lows can be deemed protected. I'm not gonna show every single example of that. You can see this happening here. And then we create a flip. We close above high. So this protected low gets broken, and we flip, and we continue moving lower. Here we see we closed, so this high is responsible for the break of this low. This high stood protected. Here you might think that this was a flip, but this is internal structure. The actual high that we need to take is this one for flip to be created. So we kept moving lower, and here price just didn't want to take this low. We created equal lows. So equal lows take out a high. So this high got taken. And eventually we went all the way up to here. But we didn't take out it with a displacement, and we consolidated. We're gonna learn power of 3 in future lessons, but for now this might have tricked you into thinking that we are reversing. And then we just flushed lower, and if you would trade it, you would probably hate it. Oh, market structure doesn't work. So I think I've shown enough examples. You can see it also happening here and here, but obviously you shouldn't treat it like a pattern, because you also need to align it with higher time frame. So you can't just look at market structure only on one time frame. You either need to have a high resolution monitor to see a lot of bars on small time frames, or just zoom out to 15 minutes and look how the things are going there. But I would use with 5 minutes 1 hour, with 1 minute 15-minute time frame, and so on. You can learn it on ICT's channel, but this is not that important. Like, it's important, but not that important. This video might have been confusing a little bit and look untrustworthy, but you will see future examples, executions, and videos, and you will become much confident with your trading and understand the price better. See you in the next lesson.